Hi folks. Welcome back to another episode of Investment Income for Life. Today, I will be going back to where we left off in part 1 of the margin investing series. To recap, in part 1, I had went through the mechanics of why the use of margin greatly enhanced one's dividend yield as well as the risk of using it since it is a double-edged sword. Additionally, I have also brought up the double standard of many investors who are okay with taking up massive 75% mortgage on their investment property while condemning investors who used margin leverage to invest in stocks. Moving on, the next question is where to open a margin account. The answer is simple. Most traditional stock trading firms like DBS Vickers, UOB Kay Hian or Maybank Securities offer margin account services to their clients. Online brokers such as Interactive Brokers, Tiger Brokers or Moomoo all also offer this service. I have included an extract from ChatGPT on the brokers offering margin services as well as the financing rates for reference. All stocks purchased using the margin account will be held in custody by the brokerage using nominee accounts. Today's main topic will be on another crucial concept with regard to the use of margin account. This is known as the margin ratio. Using Maybank Securities as an illustrative, all its clients need to adhere to the 140% margin ratio. Once the margin ratio drops below 140%, you will be getting a call or email from your broker to quickly top up in cash. If no cash is provided, the brokerage will immediately sell off your stock holdings to restore back to the 140% level. This entire process is known as the margin call. To further elaborate on the mechanics of the margin ratio, assume one have 150,000 Singapore dollars in cash being deposited into the margin account. Let's say the margin investor decided to purchase 300,000 Singapore dollars of DBS Bank stock using this cash and also the drawing down of 150,000 Singapore dollars of margin loan for financing. The margin ratio in this case will be 200%. Now, assuming that DBS Bank stock suddenly plummeted by 50% due to global recession and heavy sell down, its market value became 150,000 Singapore dollars instead of the original 300,000 Singapore dollars while the margin loan of 150,000 Singapore dollars remains unchanged. The margin ratio would have declined to 100%, which is way below the margin ratio of 140%. This will thus trigger off the dreaded margin call. Personally, I always attempt to keep to a minimum margin ratio of 200% during normal economic times so as to maintain a safety buffer of around 30% market price decline. Ideally, one should aim even higher than 200%, that is, for a 250% to 300% margin ratio to be extremely conservative in event of sudden stock market crash. Last but not least, it is critical not to put all eggs into one's basket. One should always keep a margin account separate as a standalone portfolio against a non-margin portfolio. Human beings' nature can easily become irrational and overconfident at many times regarding the prospect of one's stock pick and reckless overpurchase. This will lead to overdrawing down on margin loan with the all-in of one's entire investment portfolio. By keeping two separate portfolios, even if the margin call is triggered due to sharp decline in market prices, there is an automatic braking system in place to prevent the total annihilation of one's hard-earned capital. Additionally, this will also enable one to do a transfer of non-margin portfolio asset into the margin portfolio account during crisis and lack of cash situation to rescue oneself against a margin call. End of the day, the essence of margin investing is not to be liquidated at the worst possible time so that one can survive till the market recovery phase. From my personal experience, my current strategy have enabled my margin portfolio to survive the COVID crisis as well as the post-COVID high interest rate and rapid inflationary environment. Okay folks, that's all for my sharing today. Do help give a like and subscribe if you find the content useful. Have a great week ahead everyone.